All right, good day, friends. Welcome to today's class. In today's class, we shall be treating the tools that are necessary for analyzing financial statements. In our previous classes, we have spoken about some of these things, but today we shall be looking at a different dimension with which how to use these tools for analyzing financial statements. The first one is ratio analysis. The second one is common size analysis. The third one is trend analysis. And the last one is working capital analysis. What are the uses of these tools? What are the objectives? What do you want to achieve by using these tools? Number one, we use them for comparison purposes. What did I call it? Comparison purposes. Comparison purposes. Now, if you say comparison purposes, what does it mean? It means that the figures in each of these tools you can use the detail in your financial analysis to compare using any of these to compare the performance of your entity, of your organization using any of these. Let me give us an example. Example of this, for example, let's say the ratio analysis. If in 2020, in the year 2020 and in the year 2019, let's say we have revenue here, and revenue is what? Let's say revenue is 1,000 or 15,000 naira, and in 2019, let's say revenue is 14,000 naira, and let's say we have cost of sales as, let's say here we have 9,000 naira, and here we have 8,500. Now, your ability to use the ratio to compare these 2 years, to compare the 2 years, that is, this will give you an eye-opener whether the entity is doing well or is moving forward in terms of revenue versus cost, or the entity is moving backward. Now, what are we saying? We're talking about comparison. How do we compare? We compare by putting two figures together: the current year versus the last year. Number one, the current year versus the last year. You can also compare between the current year versus what you call the forecasting figure. You can do that. You can compare using any of this to compare the future value of the future projected value of the company using the same entity or the same tool. Okay, also you can compare the current year. You can compare the current year and the current year of the entity versus the current year of another entity in the same industry. The current year of the entity versus the current year of another entity in the same industry using these tools. I hope we are following. I hope this is coming to us live now. Okay, another way by which we can compare is by comparing the subunit of an entity with another subunit of the same entity. Let me take it again. You compare the subunit of an entity, what you call division, a division of an entity with another division of the same entity. And also, you can compare the performance of the entity in one country with the performance of another entity in another country, but must be under the same umbrella, the same industry. I hope this is following. Now, what we are trying to let us know is that we can use these tools for comparison purposes. And why are we bringing this up? We bring it up always. We always bring this up always because we want to help. We are trying to help as to how to generate figures and generate results that can be used to populate your report writing. Okay, now another reason why, another use of these tools for analyzing financial statements is for appraisal purposes. That is for performance appraisal. Performance appraisal could be the performances, comparing the performances of the management of an entity with, in a particular year, with the performance of the same entity in another year. Okay, now the appraisal can also come in the form of, say, the performance of one product of the entity compared with another product which has the same, like some similarities in them. You understand it? You can use it to appraise their performances also. You can use these tools also to appraise the performances of one unit, like I said in the other one, in the area of comparison, to appraise the performances of one unit of the same entity with another unit in the same entity, and so on and so forth. I hope this makes sense to us. Okay, let me reiterate what I have said, that the uses of these tools, what do we use them for? We use them for comparison purposes. That is, you compare the current year with previous year, compare the current result of an entity with future result or forecast result or projected result of the same entity. You can compare also a subunit of the same entity with another subunit, or another subunit of the same entity. You can compare also products. And likewise, you can use these tools to appraise the performances of one entity with the performance of another entity in the same industry. You can use these tools to appraise the performance of the entity in the current year versus their performance in the last year. I hope this is flowing. Okay, so for today's class, we shall be ending it here. But in my subsequent class, I will be breaking this down into units, and I'll be showing us how we can use these tools to appraise or to compare using our financial statement. Thank you, everyone. I really appreciate our attention. Please, let's look forward to our next video, and I will see you there in my next lecture. Thank you so much.